Good morning, one and all, and welcome to this morning's video. So, this morning, after a little bit of volatility and gapping in the market, I have one pair on watch, and that is pound dollar. And I'm looking to get long on this today or possibly tomorrow. But why am I looking at this pair? I'm looking at this pair because the narrative, potentially the short term narrative as I see it, is that we broke below here. We broke below here by way of we broke below here, and then we broke back above by way of this evening star formation, morning star formation rather. Okay, and if we just zoom in a little bit to the most recent closes, you can see that we pushed up. Okay, we broke back down again, and we tapped into this little area of consolidation here. Okay, we wicked below it, we wicked not to it but through it, and then we pushed up with aggression by way of yesterday's daily close. So I'm seeing this as potentially just an impulse correction continuation to push higher, to potentially tap into this area, which this high near missed to, or potentially go a little bit higher and tap into this area, given that this high just narrowly failed to retest the back end of this, of where there's quite a bit of volume. Okay, and if we just measure this, so what I'm doing is I'm measuring from here to here. This, if we pull back into this area, or even if we just tapped into that area, that would be a pullback of about just over 50%. It could be just a shorter term move. So we end up tapping into here or tapping into here, and then we come to the downside, okay, to tap into this low here, which this low near missed too. Okay, so that's just the picture as I'm seeing it, the picture that the market is painting for me at the minute. And of course, if that changes, then we adjust our sales. Okay, but we've tapped into an area of liquidity. Okay, and we've pushed up, and now we seem to be correcting afterwards. Okay, I like the fact that you can see that consolidation even on the daily. Okay, and the other thing that stands out to me is that if we just analyze this, so analyze this, all of this price action here. So we moved up quite correctively to start with, but if you actually look at where price started to move up with aggressions, okay, so when the pullbacks started to become smaller, so here we got the bigger pullbacks, okay, once we started to get impulse and we had smaller pullbacks, okay, and we got to move all the way up to there, that started here. Okay, so I'm not surprised that we tapped into this area and moved up with a similar level of aggression again, okay? Because how we responded last time is an indication of how we will likely respond the next time, especially if we tapped out a lot of the stop losses that were sat just below, okay? Another thing that I like, because I don't like to be trading when there's gaps like this, so if we consolidate afterwards, a lot of the time we will fill the gap. So when we dropped off here, I wasn't surprised that we didn't consolidate underneath and drop, because a lot of the time there's still orders within the gap that need to be filled before we can move in one direction or the other. Okay. And if we have now filled that gap, if we then consolidate above the gap, that gives me a reassurance that after this gap, we're not just going to get wacky price action, and that this is more settled price action. Okay. And so what I'll be looking for today is the following. I'll be looking for a 1 hour structure. So it will be a larger 1 hour structure if it does shape up. So something like, if we just get that off, I'll be looking for something like this. It may not look quite as large as that. It's not meant to be to scale, just a illustration of what I'm looking for. So it would be a larger 1 hour structure, and then I would look for a 1 hour risk entry within it. Now, do we have reason? Does the price have reason to come back down? Well, first of all, we need that base, or the inverse of a base, so a top, and then something like that. Okay, does price have reason to do that? Well, if you look at the most recent 4 hour candle, it closed like that, bearish with a wick below it. And if you look on the 1 hour chart, what do? We ever so slightly wick through it, but most of this wick is to the area. Okay, so when we get a 1 hour candle like this and it's bearish, and most of the wick is to the area and not through it, That's a good indication that we're going to come back down, give us something like that before we go. And there's also another little clue as well. If we just drill down to the 15-minute chart, you can see, what did we do? We narrowly failed to retest the back end of this, where this little bit of volume was there. So then, therefore, price has a reason to come back up, come back down, retest the back end of that, give us that 1, 2, 3, give us that base up there. Okay. And have we moved up? The other clue is, if you look at this bearish candle there, we've moved up a lot more correctively than we moved down. Okay. And if we just look at the DXY ever so quickly, I'm just going to flip to the DXY. So for those that are new to these videos, my videos, the DXY is the, just checking my mixer is still on because we've just had some problems with that. The DXY is the inverse of euro dollar. It's the dollar index. If you look at what's happened here, we tapped into this area of liquidity, okay, and we sold off with quite a lot of aggression. We then tapped into that area again, broke just above. So it's kind of the inverse of what pound dollar is doing to some extent. If we look here, we have a near miss to this area of consolidation here, okay? So it's likely the case that we'll come down, come back up, tap into the area that this high near miss to. And if we do that, we'll likely get the inverse of that on pound dollar. So if the DXY does this and then sells off, pound dollar, if given that this would be dollar weakness, that would likely give us pound strength against the dollar. Okay, so we would likely get that structure that I'm looking for. So that's what I'm going to be looking for, folks, today. And then I wouldn't want to be trading into these highs as well. So I do like the fact that we've got a risk entry here, because it allows me to manage my trade each time we get to this inflection point, this one. Okay, so I can get my risk off the table. And so I'll be working with, I don't think this would hold the top of this structure if we got something that deliberate, but we would have to be mindful of these potentially. But we would have 3% there, 3.2 to there, about 5% to there. But in this instance, I would actually be targeting, because I said on the higher timeframes that we could come up to here and we could come up to here, because this failed to retest the back end of that. I would actually be targeting this high here, where price would potentially need to build more volume before continuing to the upside, which would mean you would potentially be sitting through slightly deeper pullbacks. And if we were to measure that, and we assume that this impulse correction continuation, the continuation leg would be of a similar length to the preceding impulse, that would take us up to there as well. So I would measure from the range. So from there to there, I would set a take profit there. And actually that lines up perfectly with that, actually. So I'd actually set my take profit there, thinking about it, which would give us something in the region of 7% to work with. So that's what I'm going to be looking for from this pair. I hope that all made sense. I hope you've enjoyed this video. This is not, I repeat, this is not a signal service. I had somebody the other day asking me to timestamp my videos, which basically means they just want to skip to the part that they want to listen to, copy my entry, execute that entry incorrectly due to a lack of experience, and then blame me for the fact that their trade didn't work out. This is not a signal service. This is designed to change your perspective. Nothing more, nothing less. Or signals, if it was as easy as just take signals off people, then we'd all be millionaires. Trading doesn't work like that. Okay, so don't be one of those people. But anyway, I hope you've enjoyed this video, and I'll see you again in the next one. Thanks for watching.